Let's bring in our market panel. Nicole Webb of Wealth Enhancement Group, Charlie Bobrinskoy of Ariel Investments, and CNBC senior markets commentator Mike Santoli. Nicole, it's great to have you here on set. The fact that we are seeing this pullback in the major averages today, got the S&P back below 5,300, 5,266 looks like where we're closing right now. It really does feel like it's AI and everything else in the market, especially when you see in recent days what's been underperforming versus what's been holding up.
Yeah, I think there's a couple of things going on. We entered this week feeling like we were going to go into a bit of a choppy spell in the market. A lot of that being, where's the confirmation going to come from that the market deserves the next leg higher? And it can't really all come from technology. And so we knew the bifurcation out of earnings season just closing out a few weeks ago. Now we're in this holding pattern, waiting for the next set of earnings data. Do we really start to see that? We only have about 42% of S&P 500 companies above their 50-day moving average. Small caps aren't going to give it to us unless we get closer to a rate cut. So this confirmation, coupled with higher Treasury yields, is creating some of this instability in the market. And so, you know, it's hard to know where you're going to get that bias outside of AI right now.
And speaking of, we've got Salesforce earnings out. It looks like the stock is moving lower initially. Steve Kovac has the numbers for us. Steve.
Yeah, Morgan, it's some mixed results here. Let me just give you the top and bottom lines while we still dig through this report. A slight beat on EPS, $2.44 adjusted. Street was looking for $2.38. And a slight miss on revenues, $9.13 billion, just slightly under the $9.18 billion the Street was looking for. You see shares down almost now 10% there, Morgan.
All right, Steve, thank you. Don't miss Jim Cramer's exclusive interview with Salesforce CEO Mark Benioff. That's coming up at 6 p.m. Eastern on Mad Money. Charlie Bobrinskoy, I'm going to go to you on this one because it does seem like coming into this hour of earnings, Salesforce really being seen as more of a macro read on the state of IT spending, given some of the cross currents we've been seeing and hearing from companies that have reported results. And a similar situation on the retail side as we await American Eagle results, too, given what we saw with Abercrombie & Fitch today.
Yeah, we've got two different things going on. With Salesforce, it's about whether big companies are spending on consulting projects, on AI projects. Frankly, the name we like here is Oracle, which has the database software that should be very useful in AI with companies analyzing their own data. That's really what AI is all about, is analyzing data to perform better. And we think Oracle has the better software to be positioned. But there's no doubt that I haven't gone through the Salesforce report yet, but we were hoping for an uptick in spending in this space, and it doesn't look like we got it. American Eagle is going to be different. American Eagle is about the shape of the consumer. There's been a lot of signs that the lower tiers of the consumer are getting kind of soft. But there have been some signs that the middle and upper tier are doing pretty well. And so Abercrombie & Fitch came out with great numbers. So it may be a case that there's real softness in the lower-end consumer, but that the higher end is hanging in there.